Did you know balanced funds have a unique edge? They offer growth while cushioning you during market downturns. Here is an eye opener. While indices can face sharp corrections in volatile markets, balanced funds have limited their fall to around 20%. That's resilience in action. Let's explore how this strategy can work for you. Hello, everyone. Today, we will uncover an investment solution that offers a smarter approach to investors in seeking optimal returns with a controlled risk. Presenting to you SBI Balanced Advantage Fund, a fund that adjusts like a seasoned captain steering through varying market conditions. Let's delve into how it can help you navigate these waters. As Morgan Housel wisely said, doing well with money isn't necessarily about what you know, it's about how you behave. Markets change, and so do emotions. During peaks, we are confident and invest more. During downturns, fear takes over, leading to panic sell offs. Let's understand why controlling this behavior is crucial for success. What we should do. In volatile markets, focusing on what you can control is key. Ignore the noise, stay disciplined, and commit to the timeless principle of buy low and sell high. Easier said than done, right? That's where balance funds help, keeping you steady and focused on long term wealth creation. Unfortunately, many investors do the opposite. They buy high and sell low. Various studies show that investor returns are often lower than the actual investment returns of the fund itself. But why? Because timing plays a very critical role. When investors enter at market highs and exit at lows, they miss out on the steady growth that comes from staying invested over time. Let's look at a trend we see repeatedly in the market. Equity inflows often mirror the past year's performance. When markets have delivered strong returns in the previous year, inflows tend to rise as investors feel confident and eager to participate in the rally. But when markets have shown weaker or volatile returns, inflows often decline as investors hold back or exit driven by uncertainty or fear. The winners across asset classes, whether it's equity, debt, or cash, keep rotating. This rotation makes timing the asset allocation a very complex task and introduces the challenge of determining which asset class will perform best at any given point in time. Balanced funds simplify this by dynamically allocating between equity for growth and debt for stability. This balance minimizes stress and maximizes long term wealth creation. So, how do we strike this balance? You have an option to either do it yourself or opt for a smarter solution to invest in SBI Balanced Advantage Fund. The fund is designed to adapt dynamically, shifting seamlessly between equity and debt based on market conditions. So let's see how this unique flexibility works to your advantage. For those looking for a reliable approach to risk adjusted growth amid market volatility, SBI Balanced Advantage Fund is designed to simplify the asset allocation. The fund provides the fund manager with the complete flexibility to adjust the portfolio across asset classes from 0 to 100% in equities, debt, or arbitrage based on market conditions. This wide range enables the fund manager to respond effectively to changing dynamics, seizing opportunities in one asset class when conditions are favorable and shifting to another when risks appear higher. Here is how it works. When market conditions are favorable, the fund increases its equity allocation, allowing investors to capture growth opportunities. But when market conditions are uncertain or unfavorable, the fund shifts, increasing its allocation to fixed income and arbitrage, thereby aiming to protect against volatility and preserving capital. By using the arbitrage and fixed income strategically alongside equity, SBI Balanced Advantage Fund seeks to deliver better risk adjusted returns with an endeavor to maintain equity allocation of minimum 65% with an endeavor to attract benefits of equity taxation. Our Balanced Advantage Fund follows a three tiered investment strategy to manage equity exposure dynamically. Firstly, we identify the net equity levels or the asset allocation in the fund. At any given time, our allocation decisions are based on three core parameters. That is, sentiment indicators, valuations, and earnings driver. After establishing our asset allocation, the next step is to determine the strategic tilt of the portfolio using a quantitative framework. Here, we assess the market cap allocation, style preferences, adjusting the portfolio skew towards value, growth, or quality stocks as market conditions dictate. And finally, we construct a portfolio based on our fund manager assessment of high conviction stock ideas provided by research team. The asset allocation of SBI Balance Advantage Fund is guided by a disciplined multi-step process developed by our fund managers. At any given time, our allocation decisions are based on three core parameters: sentiments, valuations, and earnings. First, we assess a range of sentiment indicators that help us provide a contrarian view on market optimism. High levels of optimism may indicate a need to reduce the equity exposure, while low sentiment can signal an opportunity to increase it. Next, we evaluate market valuations using traditional metrics like trailing PE and Schiller P, along with earnings yield spreads against bond yields. These valuation metrics helps us to determine a broad initial allocation to equity. And finally, earnings driver play a very crucial role in refining our equity allocation within a specified range. This additional overlay allows us to fine-tune the net equity levels based on indicators such as fiscal and monetary position, real interest rates, and global market trends. As you can see from the above trend, we have maintained our net equity levels in the range of 30 to 45% based on the asset allocation framework. So let me summarize why this fund stands out. Firstly, due to diversification. The fund offers exposure to a mix of asset classes, helping spread risk across equities, debt, and arbitrage. This diversification provides a buffer against market volatility, enhancing the stability of the fund returns. Secondly, expert management. Our team of seasoned fund managers continuously monitor market conditions, making informed adjustments to capture growth while managing the risk. Then comes asset allocation. The fund's dynamic ability of asset allocation framework adapts to changing market conditions, aiming for an optimal mix of equity and debt that aligns with the prevailing opportunities. And finally, the complete flexibility. With the freedom to allocate between 0 to 100% in any asset class, the fund managers can fully leverage opportunities as they arise, ensuring a responsive and an adaptable approach. This fund suits a wide range of investors, long-term wealth seekers, cautious equity investors, or anyone looking for a balanced approach between debt and equity. This fund is designed for you. Whether you are starting your investment journey or looking to strengthen your existing portfolio, this fund can be the foundation for your wealth creation journey. Invest with confidence, knowing your money is working smartly, adapting to market opportunities while safeguarding your future. Make the choice today to invest in your future because your goals deserve the best path forward. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.